I've traveled all the way to Lisbon, Portugal to meet a trader that claims that ICT made him profitable right off the bat. I have one question for him. What is the strategy that made him profitable, and is it even possible to be profitable with ICT right off the bat like that? Well, we're going to ask him and find out.
And you need to remember to watch the whole video right to the end, because I'm going to find out if I can get him to show you the exact strategies step by step, and we're going to see at the end of the video if he's willing to do that for us. Hi, this is my girlfriend.
Hi.
Good
and you?
Right, so we got Kimmel Trading here. Welcome, bro. Thank you very much.
Thank you for having me.
So the main question that's on everybody's mind is, can ICT really make you profitable right off the bat? And can anybody be profitable trading ICT right from the start?
Yeah, so basically I had a video doing well when I said that ICT made me instantly profitable, and it's true, but it's not completely true. So yes and no is the answer. So the reality is most people can be profitable with ICT, but not instantly. I just became instantly profitable with ICT because I had a huge number of years before that learning foundations from other strategies, learning how to backtest, learning how to journal, learning how to do daily processes, everything that laid the foundation so that when I went into ICT, it's such a profitable strategy for me that it just clicked and I was instantly profitable. I was profitable before, it just gave me a better understanding of the market. Now, the reality is, can anyone become profitable with ICT? Yes. Can everyone become instantly profitable with ICT? Absolutely not. Because for you to have the same trajectory as I had with ICT, you would also need to have the 4 years of working non-stop in the previous strategies, which most people don't. So the reality is you can get there, but don't expect it to do instantly.
Right, and obviously you've had your experiences prior to becoming an ICT trader, and so obviously it's impossible to replicate that. But if we had to create a blueprint, where would you start? Would you start at psychology, which is what most of these gurus will tell you, work on your psychology first, or would you start with strategy?
I would obviously first start with strategy. I don't think psychology matters in the first year of your trading. It matters, but like 20%. So the reality is people think that trading is 80% psychology, 20% strategy, when in reality, if you're not profitable, saying affirmations that you are a profitable trader is not really going to solve it. So the reality is, like in the first year, focus a little bit on psychology, and maybe first, second, third year, focus a little bit on psychology, and the highest amount of focus has to be in the trading processes. The most amount of focus has to be in the strategy, in all of that. So people forget that the bulk of the profitability comes from the strategy, and then the bulk of the profitability comes from the psychology once you are actually profitable.
Right, and so when you're starting off working on your strategy, where do you start with ICT's content? Because there is so much content that ICT provides. Where do you start with this content? And then once you've consumed the content, what is the process of deciphering which methodologies are going to work best for you as a person? Because everybody's different. How would you go about that?
Yeah, so basically, what I tell people is that ICT is like going into a restaurant and being given a menu. You can't just pick everything. I would say you have to read everything that's on the menu, and then pick and choose what you want. So what I tell people to do, the blueprint that I would tell people to use to become profitable with ICT is that watch the 2022 mentorship, then watch the core content, and then watch the other series that he has. But you actually have to watch all of the videos, because the reality is a lot of the people that are watching, you try to jump and change and not watch these videos and then just skip these couple of episodes because they don't really matter. Just watch everything and then you pick and choose what you want, because at the end of the day, what people are mostly going to learn from is trial and error. People have to try something out and see if they like it. Liking it and not liking it is not because you had a losing trade, it's actually if you resonate or not with it. So for example, with me, I don't resonate at all with optimal trade entries. Yet a lot of people that I know that are extremely profitable with ICT, they use optimal trade entry. But I just don't like it in general. It doesn't resonate with me, so I don't use it. That's why 3 things that resonated with me the most was daily bias, power of 3, and then just the entry model.
And as you said, once you've chosen the part of the menu that you want to use, you can now work on that. You can now start to backtest, you can start to journal, you can start to do, self-review. All of those aspects And that's just going to take time. It depends on your personality, right? But once you've started to nail down that strategy, the next part of the blueprint is obviously going to be your psychology, which can then start to dial things in, right? Yeah. Where would you go with that? What would you look to do as your next step of dialing in your strategy more from a psychology point of view?
From the psychology point of view, it's also a lot of trial and error. You need to understand that a lot of psychology, you can read the books, you can watch the Instagram reels, you can watch the videos, you can watch everything. Yet, if you don't apply them live, you will never learn it. It will never hone in. So the more people say, oh, trading is just probabilities, if you don't see the fact that it's so random when it's a winner and when it's a loser, well, random so to say, then you will never progress with your psychology in general. So if you want to improve your psychology, do you read the books, do you watch the videos, do you watch the webinars, whatever it is, but then make sure to actually have live market experience. That's one of the things people lack the most. They try to learn how to ride the bike without actually getting on the bike. If you want to learn trading psychology, it's not just by reading the books, it's actually by going onto the market, seeing how you are reacting to the market, journaling how you are reacting to the market, and then being like, oh, okay, there you go, I'm feeling FOMO now. Okay, I know that every time I do this, I have a losing trade, so let's just step away from the market now. Okay, now I'm feeling fear of being wrong, which is, oh, my trade is currently in drawdown and I want to close it. Have that in your mind, be conscious about it, and then write it down, let the trade ride, and then make the constant adjustments with that. But people just skip the part that they have to do it themselves. We live in an era where people are just like, oh yeah, everything should be done for me. It's like, no, everything should be done by yourself, especially in trading.
So you've got your trade psychology worked out, you've built on the foundation of the strategy, as we've deciphered that is actually the foundation, not the psychology itself, but the strategy. And obviously, like we've said, when you're picking a strategy, one of the biggest things to avoid is the shiny object syndrome. And a lot of people get that. And that's kind of like the aspect of psychology that a lot of people struggle with. Would you say that's more of an actual trading psychology thing, or just general psychology, like you're just being a gambler essentially?
Yeah, I would say there's a big difference between trading psychology and overall human psychology. So for example, I have to be very careful with the way that I approach the live markets, because I can quickly fall into the gambling mentality. Like, I've always had an addictive personality, etc. And so because of that, I've always had to be wary that I can easily fall into the gambling cycle of like, oh, okay, I risked 1%, I lost, I'm gonna risk 2, whatever. So that never happens a lot to me. I almost have it under control. That's the other thing. Like, you're never going to have things 100% under control. You just don't have to judge yourself too much about it. But yeah, in general, people need to be able to distinguish what is human psychology and what is like trading psychology, because they're very different but very similar at the same time. So everything that is related to trading, when we're talking FOMO, when we're talking the fear of being wrong, when we're talking about like, oh, I don't set a stop loss because I don't want to be wrong, everything that is 100% related to trading, then yes, that is trading psychology, and that's something that you need to work on. But let's say that you struggle with following your trading plan, yet in your whole life you can't stick to a plan that you set out to do. If you say that you are going to do X, Y, and Z, and you just do X and you don't do Y and Z, then how do you expect to follow your trading plan, right? If you say you're going to the gym, yet you don't go to the gym, then you are not disciplined. So if you're not disciplined outside of trading, how do you expect to be disciplined inside of trading? So that's normally what I tell people. So be careful with your trading psychology, but also understand what are the things that you can change in your life that will positively affect your trading.
Right, so we've now selected the strategy. We've worked on the psychology, both personal and trading psychology. We're now starting to execute trades live. What, in your experience over these years of trading, trial and error literally, to discover the thing that actually worked for you, what are some of the takeaways that you have that you would implement now if you were starting from scratch?
Yeah, so if I was starting from scratch, the first thing that I would tell people is don't go for a prop firm challenge. That's the first thing. That's going to mess up with your psychology. That's going to mess up with your mentality. profitability, because you're just being spoiled with the great possibility of possibly managing more funds than you are willing to manage. So what I would say is open up a small personal account. I started personally with $1,000. I know that that's a lot for some people, that's not a lot for a lot of people. So what I would say is deposit an amount in a broker that is going to make you take it seriously, but not make you so fearful that you are not going to execute. And that's when you start executing in the live market. That's when you start feeling these issues that the live market gives you of FOMO, the fear of missing out, the fear of being wrong, the fear of, oh, I have to take this trade because else I'm never going to bank on the trade again. And so with that, the small live account is going to give you as much knowledge as like learning for a year. Someone that learns for 1 full year, just learns and never executes on a live trade, and someone that learns for 3 months and keeps learning for another 3 months but executing live, they're going to be far more ahead than the person that just learned for 1 full year. So that's something to keep in mind. Open up a small account, not financial advice obviously, and then go from there, like learn from trial and error.
Right, and as you've said, strategy is basically the basis that you need to build all of these different blocks on. Would you be willing to show us your strategy and share with us how you look at the market through the lens of your ICT implements that you use?
Yeah. I'm down. Let's go onto the computer. Okay, so the way that I break the charts down is actually quite simple. So I look at 3 things. So there's a reason why I look at these 3 things, basically. So the daily bias is because I want to know the direction of the market. Is the market moving up or is the market moving down? And I want to trade according to that. But then I understand with the power of 3 that a candle looks something like this. A bearish candle is always going to have 2 wicks in one body, and my goal is understanding that all of this is price, right? So what this means, if we go onto raw price section, what this means is that as soon as the market opens, let's say that this is the candle, that for a candle to play out, we need to range a little bit, range, then move higher. This is going to be manipulation to then move lower and then execute on the short. So this is where I'm trying to execute. And if you really think about it, what I just drew right here is this candle basically. It's open, move lower, and this is the wick. Like, this is what a bearish candle looks like in general. So if you dissect it into raw price action, you just have the manipulation phase, the market shift phase, and then this is where I try to find the confirmation to enter. So that's where the market shift comes in. So the daily bias, I want to know what this candle is going to do. Is this going to move up or is this going to move down? And then depending on the daily bias, I look at the power of 3, and then I think, okay, where is the manipulation in the market and where is the market actually going to go based on the daily bias? And so that's where I look for the manipulation, which is basically above daily open or session open. That's one of the things that we'll see in the trade that I'm going to break down. And then I just wait for the market shift in line with the daily bias for me to execute and try to profit, because obviously it doesn't have a 100% strike rate. If it did, then I wouldn't be here. I would probably be in the Bahamas just chilling. But yeah, let's break down a trade that basically has all of this. So this is the trade. It was actually really nice trade. So on the weekly, we had just reached a big target on the weekly, which was this inverted fair value gap. And then we actually had this candle print. And if we go onto the 4 hour, we can see this huge bearish candle right here, which broke all of the order flow on the 4 hour. So the order flow on the 4 hour was exactly this, and it was broken as soon as this 4 hour candle closed. And so I was like, okay, so this means that right now I'm looking for shorts. And so once New York opened, this was the New York open, I thought, okay, the market has to move up now for me to enter. Obviously, for this to fit my criteria, the market has to move up, because what is that? That is the manipulation to then shift lower, and then that's where I want to execute. And so if we go into the lower time frames, we can see that we had this push up. If you look at that, so So this is New York manipulation, sweeps these highs, taps the fair value gap right there, and then starts moving lower. And if we drop onto the 5-minute, that's where you can see, okay, we have the move higher that sweeps the highs. We have a very small down close candle right here, the tap of the order block and the fair value gap, the move lower. This to me was the first signs of market shift, and then my first execution was at the down close candle. Then as the market keeps moving lower, I went onto the 15-minute and I actually also executed on the 15-minute, which was as soon as we broke below. What do we have here? We have another fair value gap now on the 15-minute after the market shift, and you can execute and target the overall lows. Because that's the other thing. Something that is very important in my strategy is that's based on the daily bias. What are you really targeting? Because you can see that this trade, this first one had a 15 pip stop and this one had a 28. So some people might be thinking, oh, I would never enter in a 28 pip stop. Listen, if the first target is a 72 pip target, that means you have a 1 to 2.5, and the second target, which was the second target for me, had a 1 to 3.5. That's an amazing target, and eventually the market did end up going for the lows, and I took profits. This was actually one of my biggest trades because I kept scaling in and the market was doing good. And we did have to handle through a big pullback, but the price did end up reversing in our favor. But that's really the simple things that I look for. So daily bias, I was expecting a bearish candle, then session bias, which was also bearish, power of 3. So we had a small manipulation. We had this very tiny manipulation up. And then we had this big bearish push, New York open, manipulation, market shift, and then execution. So those were the 3 things that I said I look for. And again, I just keep it simple, and that's really it. There's not much more to it.
Right, so thank you, bro, for sharing that with us. I think a lot of people learned a ton from that. There's a lot of people that waited till the end of the video to watch this, and to those, you were rewarded because it's not something you want to miss out on. To everybody who watched, thank you very much for watching. I'll see you in the next video. Thank you for being on, bro.
Thank you for having me on.
Sweet. Cheers, everyone.